Hello friends, as students have requested for some concepts relating to the examination question papers, and particular request came out from some students for solving inventory question from June 2024 examination, which was just conducted 6 months back from here. So I have come out with that video, so with a proper explanation to give a simplified way how to solve the question, and let's clear the concepts of all the students who have some doubts or difficulties in inventory question. And one more guys request, if you have any such conceptual clarity problems or concepts are not clear, or if you have some doubts in any of the illustrations, please feel free to contact or message me. I'll try to do the needful and come out with a solution for you guys always. So keep watching, keep subscribing, keep liking the videos. We'll come out with new things every now and then. So now let's concentrate on June 2024 examination question paper, and I'm going to solve the inventory question. I have this question on the screen with you, and I'll explain you how the solution has been done or prepared or whatever the case may be. First of all, this question is related to physical stock taking. Physical stock taking means, suppose the year ends on 31st March, and suppose if the businessman takes stock taking after the year end, that is 10th April. Can I say this is after the year ending the stock taking has been done? So yes, so in between this 10 days, that is from 1st April to 10th April, I'll repeat, this is my year ending, this is stock taking date. Concentrate guys. Year ending is 31st March. Let's assume stock taking has been done on 10th April. So in between these 10 days, whatever transactions the businessman has done, transactions means what? Purchase and sale. We are supposed to calculate stock on 31st March. He has calculated the stock on 10th April. So we need to go back on 31st March from 10th April. Guys, concentrate. We are standing on 10th April. We have counted stock on 10th April. We need to show the closing stock as on 31st March. That is the year ending on which books of account are closed. So whatever transaction happening between 1st April to 10th April, they need to be adjusted. Now how adjustment need to be done? It's very simple. Remember two words. All purchases between 1st April to 10th April. All purchases between 1st April to 10th April, we will have to deduct. Why deduct? Because we are standing on 10th April. All purchases made between these 10 days, we have added to the stock as on 10th April. हमने ऐड कर लिया होगा 10वीं अप्रैल को, क्योंकि वो गुड्स तो हमारे पास पड़े फिजिकली. बट नाउ वी आर सपोज टू गो on 31st March and find out the book stock, the stock which is lying in the books of accounts. So can I say as on 31st March these goods were not lying with me, hence we will deduct the purchases which has been made from 1st April to 10th April. I hope the concept is clear. We are supposed to take stock on 31st March. Unfortunately, we took stock on 10th April. So on 10th April, whatever purchase is made between 1st April to 10th April, we must have included while calculating the closing stock on 10th April. So now we need to go back on 31st March. So can I say all purchases which were made between 1 and 10 were not with us on 31st March. So hence all purchase should be deducted. And all sales done between 1st April to 10th April should be added back and added at cost price. Added at cost price. Same thing. All transactions or all sales happening between 1st April to 10th April. These goods are gone out of the business as on 10th April. So as on 10th April, we don't have these goods. But on which date we are supposed to calculate closing stock? On 31st of March. So can I say on 31st March these goods were lying with us only? And so all sales done between 1st April to 10th April should be added back, and that too at cost price, because goods should always be valued at cost price. And one more thing, why cost price? Because on 31st March they were not at sold. So why to recognize the profit? So this is the concept. Now let's start with the question number 5 of the exam, that is June 2024. Manish closes books of account on 31st March every year. So this is the year ending. Inventory taking for the year ended 31st March 2024 was completed by 10th April. So tell me guys, this is after the year ending stock taking has been done. So you remember only two things. All purchases should be deducted and all sales should be added at cost price. On which date the value of stock available in the godown was 4,50,000 at cost. So on 10th April when we took stock taking, the stock was 4,50,000 amount of goods we were having on 10th April. Now let's start with this. Following are the details of transaction that took place between 31st March and 10th April 2024. Goods sold to customers 1 lakh 10 and sales return 10,000. What is the net sales? 1 lakh. What is the net sales? 1 lakh. But this is selling price. We need to bring this goods at cost price. So let's go ahead. Purchase is 85,000 including cash purchase. That doesn't have any meaning. Purchases are purchase and purchase return is 2,500. So what are the net purchases? 85,000 minus 2,500. Net purchases are 82,500 and purchases will be, you tell me guys, what will be done with purchases? This will be deducted from the stock to find out the correct stock, and sales, net sales will be added at cost price, but still we don't have the cost element. Now let's read this line before going for 4 5 6 adjustment or 5 6 adjustment. Goods are sold at a profit of 25% on cost. Now this is the profit element, so they are charging profit of 25% on the cost price, on the cost price. So we will not add 1 lakh rupees, we will bring 1 lakh at cost, and 1 lakh in that 25% profit is included, so 75,000 is the cost price, so 75,000 will be added back. I hope it is very clear. So we can go step by step. This is the stock 4 lakh 50. This is net sales 1 lakh. Out of that we will deduct the GP margin, so we will add 80,000 to the cost of goods. How this came, I'll explain you very clearly. It is 25% on cost. You have heard this equation in school when you are going to school. CP plus P is equal to SP. Cost price plus profit is equal to selling price. It is 25 on cost. Now teacher always used to tell us, let cost price be 100, let selling price be 100. But many of us are not aware which should be taken as 100. So I'll give you one shortcut. 25% on cost. Whatever word appears after the word percentage. Percentage के बाद जो word आता है. After percentage, whatever word appears. Whatever means what? Only two words I'll say. Cost or sales. If cost word appears after percentage, let cost price be 100. If sales word appears after percentage, let selling price be 100. So in the given case, in the given problem, 25% on cost, hence cost 100, profit 25, selling price 125. You can apply this formula everywhere, wherever this type of equation is asked. Now, what is the net sales? 1 lakh. What we are supposed to find out? The cost price, so into 100 divided by 125. This comes to 80,000. And you can see 80,000 has been added to the cost of goods on 31st March. Purchases have been deducted, that is 82,500, because they were not with us on 31st March. Fine. Now let's go to the question. Goods costing 15,000 received in March. So we have received goods costing 15,000 in the month of March for sale on consignment basis. Now what is consignment basis? Consignment means there are two parties in a consignment. One is the consigner, one is the consignee. Who is the consigner? The owner of the goods. The owner of the goods. And who is the consignee? The person who will sell our goods on commission basis. Means there are two parties in consignment. One is the owner of the goods, known as the consigner, and the other party is known as consignee, who sells the goods on our behalf and charges commission. So basically you can say consignee is one type of agent of the consigner. So you guys have sent goods to me on consignment basis because I have received goods. So can I say I am the agent, I am the consignee, and you are the consigner? I hope it is clear. Out of which 60% of the goods have been sold by 10th April. So I sold 60% of the goods till 10th April, and 10th April is the date of stock taking. So 15,000 goods you have sent to me. Out of that 60% sold. So can I say 9,000 sold by me? So sold, very good. Nothing to be done. Nothing to be done. That's already gone out of the business. But what about the balance 6,000? How 6,000 came? 15 minus 9. They are still lying with me. They are still lying with me. But are these goods belonging to me? I am the owner of the goods. The answer is no. But since they are physically lying with me, I'll deduct from the stock. So hence I'll deduct 6,000. These sales are not included in the above sales. And please read this line. The goods which I have sold, they are not included in my sales. So nothing to be done. But what about the remaining goods? 40%. That is 6,000 amount of goods. They are still lying physically with me. Are these goods belonging to me? Am I the owner of the goods? The answer is no. So hence they are physically included in my goods. Hence we need to remove it from our stock. So this is 6,000 which we are going to remove. And one more adjustment is there. After the stock taking was done, means after 10th April, it was found that there were certain very old slow moving items costing 14,850. Certain slow old moving items. Slow means they are not sold at a proper price. They are sold below selling price. Old moving item is outdated, out fashion items whose cost price was 14,850, which should be taken at 9,500. Now we had purchased some goods at a cost price of 14,850. Due to outdated of technology, due to slow moving, due to customers disliking the product or customers have changed their mood, we have reduced the price of the goods from 14,850 to 9,500. So can I say this is my selling price which I have kept? Means 14,850 goods I have purchased, I have kept in the showroom. Now I have kept a tag that selling price of these goods is 9,500. Can I say these goods are sold below the cost price? Any goods which are sold below the cost price or at cost price are all abnormal goods. Are all abnormal goods. So certain goods costing 14,850, which were very slow and old moving items, were taken at 9,500. Means we have taken the selling price or we have valued them at 9,500 to ensure disposal to an interested customer. So if somebody asks, and sir, what is the value of this good? I'll say, sir, 9,500, give it to me and take away. So what I am supposed to do in inventory chapter, I paid 14,850. Now I am trying to sell it at 9,500 if any customer comes and buys. But till date, nobody has come. So can I say these goods are also lying with me in the godown? So now I am a prudent businessman, I am a conservative businessman. What I am supposed to do in the value of inventory? Can I say 14,850 goods I have valued at 9,500? So I have indirectly booked a loss of 5,350. Why indirectly? Because it is not yet sold at 9,500. But can I say my loss is confirm of 5,350 at least, because I am a prudent businessman. All losses should be booked immediately. So this much loss will reduce the value of inventory because loss reduces the value of inventory. 14,850 I paid. Now I am going to sell it at 9,500. 14,850 debit, 9,500 credit if somebody comes to buy. So what is the estimated loss which I am going to incur? 5,350. That will reduce my inventory, so that is also deducted. So this is the value of inventory on 31st March 2024. I hope the question is very clear. It was a very easy question, guys. Try to understand the concepts and feel free to ask the doubts. That's it. Thank you, guys.